Good morning and welcome to 3 Minutes on Markets and Money. I'm your host, Lance Roberts, talking a little bit about that rally yesterday. Wow, what a great day. Of course, Pfizer came out and announced, hey, they got a drug that's 90% effective. That's the good news. Markets rallied really sharply out of the gate, but then wound up selling off all day yesterday. In fact, unable to hold all-time highs yesterday in the S&P, closing back below that level as really kind of the reality came to roost that it's great that Pfizer's got a drug that's not approved yet and is still early in testing. They are going to apply for a fast track approval to get some doses out for essential needs by the end of the year, but very likely won't be available for public use until sometime late next year. It's not going to, in other words, you're not going to see a vaccine show up at CVS anytime soon. That really kind of started to weigh on the markets because, again, we've got rising COVID cases. We've got rising death rates in the country now. UK is now shut down again. Europe is now shutting down again. This is all going to feed back into slower economic growth. So markets are well ahead of themselves right now, in particular, more than just about any other point here. Now, as we've talked about here over the last couple of weeks, markets are on a buy signal here that has given a lift to the markets. And unfortunately, while we got the news on the vaccine yesterday, the markets had already priced in a lot of that news yesterday. I mean, whether it was the election or the news on the vaccine, we'd already seen a very, very big gain in the markets. In fact, we went from the lows of retesting back to September to all-time highs in just a matter of a few days. So markets well ahead of themselves currently. And if you go to our website today, realinvestmentadvice.com, we have an article out talking about, technically speaking, S&P 3750, but going through the risk. Currently, markets are extremely deviated from long-term moving averages at this point, as well as very, very overbought. In fact, there's a lot of these sectors yesterday that had strong rallies like basic materials, energy, industrials. That are now 3 standard deviations above their 200-day moving average. Those can't last indefinitely, and you're going to get a correction back in those markets. Be careful here about chasing the rally yesterday because, again, while the markets are in a bullish trend right now and will likely be in a bullish push through the end of the year, markets are very ahead of themselves at this point. So trying to buy into markets now, you're really a little bit late. Markets are going to have some sloppiness. Typically, markets tend to be weak just before Thanksgiving holidays. And then in the first 2 weeks of December, we typically get mutual fund distributions that apply some downward pressure to prices as well. And kind of sets the market up for that year-end Santa Claus rally. So again, you'll have some opportunities here over the next couple of weeks in particular to rebalance your portfolio. So use the opportunity yesterday to take advantage of those gains and rebalance some risk in portfolios and look for the opportunities to buy into on weakness as we get into the first couple of weeks of December. I'm your host, Lance Roberts, on 3 Minutes on Markets and Money. Get by the website today, realinvestmentadvice.com. Get our latest Technically Speaking post, which goes over the market technicals specifically and what the risks are at this point. Again, that's realinvestmentadvice.com. We'll see you tomorrow.